So hi everyone and welcome to the Dumfries and Galloway property market update today, hosted by ESPC. My name is Ashley, so I'm your host for today. I'm going to introduce you to our panel of experts as we go, but we have set aside 30 minutes for this session. We just want to say thank you so much for coming along. Thank you so much for tuning in to listen to us. We have got a section that we're going to do as an update, and then we're going to have another section that we are going to do in pre-submitted questions and answers from our panel of experts. So if you do have any questions throughout the presentation, please feel free just to try and pop it in the chat box. And if we can't get round to you, we will do our best to try and follow up with you after the session has ended. So I'm just going to introduce you to our panel of experts that we have with us today. So first of all, we have Murray. Down in the corner there, he is one of our independent financial mortgage advisors, from ESPC. So hi Murray.
Hi everyone.
He's going to be answering some questions today. We also have Paul, who is from Cavers & Co, based down in Dumfries and Galloway as well. So he is our solicitor for today. And we also have Claire Flynn, who's our senior PR and content exec from ESPC, who's actually going to kick off this first part of the meeting. So without further ado, I'll pass over to Claire.
Thanks, Ash. Hi, everyone. Thank you for coming. So I'm just going to give a brief sort of market update for Dumfries and Galloway, just looking at some of the key market statistics we've seen over the past few months at ESPC. So we're looking at the period from December to February, so the past 3 months. And the average property selling price during this time in Dumfries and Galloway was just over £177,000, so that's up about 15% compared to the previous year. So quite a reasonable increase there. During this time, the median selling time, so that's the median time for a property to be placed under offer in Dumfries and Galloway, was 36 days, which is 21 days faster than last year. So quite a significant reduction. That's a full 3 weeks faster. So already you can kind of see we're seeing higher selling prices, faster selling times. So it's already kind of indicative of a competitive market with strong buyer demand, compared to the previous year. This is further indicated by the average percentage of home report valuation achieved by properties sold in Dumfries and Galloway. It's now sitting at 100.6% compared to 96% last year. So again, that's quite a reasonable increase, and it suggests people are bidding at the home report valuation or a wee bit higher in order to secure the property they're looking for. So again, an indication of a competitive market with strong buyer demand. One thing we've noticed in Dumfries and Galloway, which is a trend we've seen across the different ESPC areas, is a decline in the number of new property listings over the past few months in comparison to last year. So in Dumfries and Galloway, it was down about 5% year on year. This again, is, as I said, is a trend we're seeing across different areas, including Edinburgh, Borders, Lothians and Fife. And we think there's a few different potential factors for this. So first of all, the start of 2020, we saw it was a really strong start to the year in terms of new property listings. So seeing a year-on-year decline isn't necessarily completely surprising because of that. But also, obviously, we started 2021 with a new lockdown in place, the stay-at-home guidance, homeschooling, and things like that that could have potentially just, for those looking to sell and move, potentially they were thinking, we'll just hold off a little bit longer. Now that restrictions are starting to ease a little bit, from the 5th of April, we'll see the stay-at-home guidance sort of lifted, and then from 26th of April, quite a lot of things are opening up. We might start to see more homes coming to market. We've seen in the last few months really strong numbers of property valuation requests in ESPC, so that does suggest to us that people are looking to sell, but they're just biding their time a little bit. So we could see some more homes coming to market in the next little while. So what do these stats tell us about the Dumfries and Galloway property market overall? Well, I've already kind of said, obviously, the higher selling prices, shorter selling times, and a higher percentage of home report valuation achieved are all indicative of a competitive marketplace with strong buyer demand. Obviously, lower supply in the last few months will also kind of exacerbate this because there's higher demand than there necessarily is supply. But more homes coming to the market in the next little while could balance this out a little bit. We will see if that happens in the next few weeks or months. So yeah, hopefully that paints a bit of a picture about what's been happening in the Dumfries and Galloway property market. I'll now move on to the pre-submitted questions. Thanks so much to everyone who submitted questions. We got some great ones. A few of the ones we did get were a little bit nicher, so we haven't necessarily been able to cover everyone that was submitted. And we've also consolidated a couple of questions. But as Ash said, if there is a particular question that you would that we haven't been able to address in this, feel free to pop it in the chat box at the bottom, and we will try and get to those at the end. And if we don't have time, you can email us, and we will put you in touch with the property expert to help with that question. So the first question is for Paul, and it's, what are your projections for the Dumfries and Galloway market for the rest of 2021 and beyond?
Thanks, Claire. Well, overall, very positive, I think, about the market going forward. Our experience on the ground is almost exactly as you just described by looking at the statistics in terms of really what's happened over the last year. When the first lockdown came in, things did slow down. There were still a few transactions going on, which were allowed to. But it wasn't really until the start of the summer, when restrictions began to be lifted, that we saw a really sharp increase in inquiries, things coming to market, buyer demand, just everything really hit the roof at that point. And the last 6 months of last year just never really stopped. I would agree again, start of this year with the new restrictions that were brought in, I think has resulted in lower amounts of selling stock, but the demand, I think, is still there. And just judging by the type of demand from last year, I think it was sort of lots of people, certainly in this region, looking to move up from down south, which is kind of always been the case, but maybe more so people realising that they can now do their jobs from home and having employers that will allow that. I think there's lots of people sort of looking to move for that reason, and seeing that their money goes a bit further in this region than perhaps other regions. So looking forward to the rest of 2021, I think as the restrictions are released, I'm expecting it to be a really busy second half of the year, more selling stock coming on, but the demand still being there. And I think that'll be reflected in prices and values and selling times, as you say. And I think sort of extending into the year ahead. So that's the way I see it going.
Great, thanks, Paul. That's really useful. And as you say, the working from home factor has probably been quite a big factor, and people realizing that they can look at different places to live, and a factor in some of the buyer demand there. So the next question is for Murray, and it's relating to the First Home Fund, which has obviously been a popular scheme with first-time buyers. But this question is specifically around whether you can use the First Home Fund to boost a deposit for a quarter share of an apartment. So Murray, can you take that one?
Yeah, no, good question, but sadly, I think the answer to that one is no, for a couple of reasons, really. The shared ownership is a completely separate scheme and type of sort of shared ownership with a property, where they're buying the 25%. Now, the First Home Fund is what we call shared equity. So the person buying the property would still own the full property, but there is an equity stake held in that by the government. So mixing the two together, wouldn't be possible. Secondly, with the First Home Fund, the owner of the property still needs to maintain a specific percentage of the value of the property, and if you're buying just a quarter share, sadly, it would fall below that, I'm afraid.
Thanks, Murray. Of course, that makes sense. Obviously, disappointing potentially to the person that asked that question. But I mean, the First Home Fund, if you are, as a first-time buyer, you are looking to purchase sort of 100% of a property with a mortgage, it is still a useful scheme.
Yeah, it is. No, it's a fantastic scheme, and one that served a lot of first-time buyers very well last year. The scheme last year shut early just due to the sheer popularity, and when it opens in April this year, I think we'll see strong demand for it again. It really just gives a number of first-time buyers a little boost in terms of the deposit side of things, and opens up mortgage products that they wouldn't have been able to look at otherwise. And it's an interest-free loan, so there's no monthly payments to be made, and it's usually repaid on sale of property. So it's a fantastic scheme that if you're eligible, which really is just, are you a first-time buyer purchasing in Scotland, it's certainly something I think you should look into and take advantage of, if at all possible. Yep.
Great, thanks, Murray. That's really useful insights there, and really good for any first-time buyers attending today that might be interested in using the scheme. So the next question is back to Paul, and I've actually kind of combined both two questions together as they're sort of around a similar theme. So first of all, is Dumfries and Galloway a good area for buy-to-let investments? And secondly, do you think Dumfries and Galloway is becoming too saturated a market for new holiday lets and self-catering accommodation?
Well, I think the answer to the first question, in my opinion, is yes. I think it is a good area for buy-to-let investments. For those that know Dumfries and Galloway, which I know Claire does, and presumably most people tuning in do, it's quite a varied region in terms of the sort of types of property, perhaps. For example, in the likes of Dumfries, there is a fairly large student population there, so you can imagine that being a pretty decent place for long-term residential lets. Whereas in other more rural parts of the region, further west, for example, it's probably looking at more holiday let type properties if that's the sort of thing you're looking to invest in. And yeah, sort of the second part of the same question is whether it's too saturated. I mean, I personally don't think so. I think there's still, it's not the case that towns are being emptied and, lots of homes sitting empty because they're people's second homes, for example, or holiday homes. I think there's still room for that. And obviously, the Dumfries and Galloway as a region tends to be quite popular with tourists. Although we like to think of ourselves a bit of a hidden gem, but the fact is it's got quite a strong tourist economy. So I think, and obviously particularly what's happened with the pandemic, I think obviously a lot of people will be taking their holidays in Scotland and Britain for the next wee while. So I think for all of those reasons, I think it is a good area for buy-to-let investments, and prices as well, of course. Compared to other areas, I think your money goes a bit further, and there's room for more investment here, I think.
Great, thanks, Paul. It's really useful insights there. I'm sure really useful to anyone who is interested. Really good point about obviously Dumfries having the student population, and also touching on holidays at home this year, which I think will be a big theme of this summer in the UK. So thank you for that. So the next question sort of carries on the theme of buy-to-lets, and it's for Murray, and it's does someone need a buy-to-let mortgage to rent out a property?
Okay, I think that's a bit of a twofold question, really. Firstly, if somebody is buying a new property with the sole intention to let that property out and not to live in it themselves, then absolutely yes, you would need to set up a specific buy-to-let mortgage. Otherwise, you'd be in breach of contract if you set it up on a residential basis. One point to note, though, is that unlike in years gone by, the interest rates for buy-to-let properties are not too dissimilar to those for residential properties. So there's some fantastic buy-to-let opportunities out there if people have sufficient deposit, which is usually about 25% when it comes to buy-to-let mortgage. Now, a slightly different answer if somebody already owns the property and they're potentially midway through an initial mortgage product. If that is the case and they decide to move out of the property, they have the potential to speak to the existing lender and request what's called consent to let. And that's where the existing lender will allow you to rent it out for the remainder of the period that your mortgage product is due to run for. At the end of that, you'd be obliged to look at a buy-to-let mortgage at that point. But yeah, if you're still within a tie-in period with a lender and you want to move out of the property, the likelihood is that you'd be able to get what's called consent to let and rent it out from there.
Great, thanks, Murray. That's really useful to know. I'm sure really useful to anyone who is considering either purchasing a buy-to-let property or renting out the property that they currently own. So thank you for that. So the next question is back to Paul, and it relates specifically to buying a house with land. So I think the person who asked it specifically is looking at buying a house with a paddock, and how, I guess, their privacy is affected by the right to roam rules in Scotland, and whether obviously they can sort of put up fences and keep it for their own use, or how they can navigate that.
Yeah, well, the right to roam comes from an act that was passed in 2003, which essentially just gave the public a general right of access. I mean, it probably comes across as something more widespread than maybe it really is. What you are allowed is to have a space for your own private use and enjoyment. So, for most people, that will be sort of reasonable garden ground. There have been some interesting cases over the years about what constitutes reasonable garden ground, and certain landowners having very large gardens. But I think for the likes of a paddock, certainly there's nothing stopping you fencing it and preventing people going through it. I think, in my opinion, these things tend to come down to the character of the land. So, presumably a field which you're going to use as a paddock is not, unless the public have sort of been crossing over it for years and years, it's unlikely to be something that the public will want to pass through. And so I think you're perfectly entitled to put up a fence to keep people out. And so, yeah, I think unless there was a sort of well-walked path right through it, then it shouldn't be something to worry about.
Great, thanks, Paul. And they've also sort of added on about whether it changes if any of the land is made up of woodland. Can you offer any insights on that?
Well, again, I think it comes down to the character of the land in question. So perhaps in the case of a woodland, there's probably a greater likelihood that the public have maybe walked through some paths in the past, in which case they can continue to do that. If you're just talking about sort of a small wooded area that is part of a garden that the public don't really access, then you can fence that off and keep it for yourself if you like.
Great, thanks, Paul. And I guess that's probably it's a question that's particularly useful to speak to local agents in the area who will maybe know the area and sort of understand which parts are maybe how things will be affected. So so definitely, if you're here, the person who asked the question, potentially worth getting in touch with a local agent to discuss further. And so we've got just one last of the pre-submitted questions that we're going to answer just now. Just as a reminder, if you did have any other questions you wanted addressed in the presentation, please feel free to pop them in either the chat or the Q&A box at the bottom, and we can try and address them just after this last question here. So this one is for Paul again, and it's, please, can you explain the under offer system? It's for people who are just moving to Scotland, so new to this process, and they're wondering if you need to obtain a survey before making an offer through their solicitor.
Yeah, well, the under offer system, as they call it in Scotland, I'm going to assume that the person who's asking the question is moving up from England, where the gazumping is well known down there, where someone can sort of sweep in and take a property from under your feet at the last minute. So in Scotland, we have a system that's designed to try and prevent that happening, or at least reduce the risk of it happening, such that it hardly ever does happen in Scotland. So if you put a formal offer in through a solicitor in writing, if that offer is accepted either verbally or in writing, then the seller is not actually allowed to accept an offer from anyone else without standing down their solicitor and moving to another solicitor, which is not impossible, but it's a sort of a bit of a faff, I suppose, when you get to that stage. So that it's designed to sort of not make it easy, such that that it doesn't really happen here. And what if you mark a property as under offer, you're required to give the purchaser a reasonable opportunity to conclude a contract to buy it. And usually that would mean, if, for example, the offer was subject to a mortgage or subject to a sale, it would usually mean that the selling solicitor would set a time limit for the buyers to have done that. And if they hadn't done it, then the property can go back on the market. So that's really what we mean by the under offer system, I suppose. Second question was about whether you need to obtain a survey before you make an offer. For the most part, I would say the answer to that is no, because we have the home report system in Scotland. So for every, certainly residential property that's on the open market, the seller has to have produced a home report, which includes a seller's survey in a standard format. And people have their different views on these surveys. Mine is that they are pretty good. They're fairly superficial, so you have to sort of bear that in mind. They're not going to cover absolutely everything, but my view of them is that you use that as a basis for assessing the condition of a property. If there's anything highlighted in the survey report that a builder or a joiner might look at, you're free to get reports on these things from a tradesperson. But in general, you don't really need to get your own separate independent survey unless you just want absolute peace of mind. But 99 times out of 100 people don't do that. So I think it is a good system for a buyer's point of view, because they're not having to shell out on surveys for lots of properties.
Great, thanks, Paul. And yeah, something home reports are a good thing for buyers not from here to be aware of, because they are really useful and normally quite easy to access as well on the likes of ESPC. So good to kind of be aware of those. So that's the end of the pre-submitted questions. So thanks to everyone that submitted those, and I think we had some great answers there, which is fantastic. We have had a question in to our chat box. So it is: would we qualify as first-time buyers in Scotland, having previously owned a property in England? Murray, do you want to take this from the perspective of some of the first-time buyer schemes that are available? I think most of them would say no, but I'd just be interested to hear from your perspective.
Yeah, absolutely. I had an identical case last week. Coincidentally, where a couple had moved up from England. They felt they were first-time buyers, but no, they had owned previously in England. So in terms of the first home fund, it was a categoric no. They do not qualify as first-time buyers. So if you're using one of the schemes, I'd say that the answer to that is no. However, if you're not looking to take advantage of any of these schemes and you're just looking to purchase straight with a mortgage and your own deposit, there is potential depending on how long ago you sold that property. If you've literally just sold it and moved up, then no, you're unlikely to be a first-time buyer. But there are some lenders that if you've not owned a property at all for 3 years, for example, they could potentially consider that as a first-time buyer.
Oh, that's really good to know. Thanks, Murray. And Paul, I don't know if you want to jump in on that as well, just from sort of the more, I guess, things like LBTT. Obviously here, there's from next week, we'll go back to the zero tax threshold of 145,000, but 175,000 for first-time buyers. Would they be eligible for that first-time buyer relief if they had previously owned, or is that again a categoric no for that?
I think that would be a no as well. I think it doesn't matter where in the world you've owned. I think if you have owned property before, then you don't qualify for that, unfortunately.
Yep, that's great. Thanks both for advising on that, and Vince said thank you as well for the answer there. So that's really useful insights. So I think, and there's no other questions in the chat box, so I think that brings us to the end of our webinar. So I just wanted to say, first of all, thanks to everyone for coming, and thank you for such great questions, and thank you to our expert panelists, Paul and Murray, for providing such great answers. I think there was loads of really useful insights in there. So thanks very much, and thanks to Ash for hosting. We do try and run regular webinars. This one is obviously local to Dumfries and Galloway, but we also do more general ones for first-time buyers and buy-to-let investors and things as well. So if you go onto our website or if you follow us on Facebook or sign up to our newsletter, you can keep an eye out for future webinars. But yeah, thank you very much for coming, and I hope you all have a great rest of your day. And thank you. Bye-bye.
Thank you.
Thanks, everyone. Bye.
Okay, bye-bye.
Bye-bye.